April, 8.3%. May, 8.6%. June, a staggering 9.1%. Okay, back up, thank you. Then July was back to 8.5%. If you haven't already guessed, I'm talking about inflation levels as measured by the Consumer Price Index, or CPI, in the United States over the last few months. And if you've been paying any sort of attention, you'll know that these figures have been ultimately responsible for much of the movement we've seen in the crypto market over that time, allowing, of course, for other factors like Terra, Celsius, 3AC, and oh God, let's not revisit all that. Now, this is because as inflation has risen, Jerome Powell and his colleagues over at the Federal Reserve have been hiking interest rates in order to try and get it under control. The bigger the inflation bonfire has burned, the harder they've had to turn on the hose, and we've all gotten soaked by the spray. Yeah, okay, thank you. Leaving aside that admittedly pretty lame metaphor, all markets, crypto and beyond, have suffered as rates have risen, but inflation has kept stubbornly climbing despite Jerome & Co.'s efforts. Higher rates means debts become more expensive to service, and those in debt, almost everyone, as it happens, sell out of risky assets like crypto and stocks in order to pay down those debts before the interest becomes too crippling. Now, the prices of those risky assets then fall as a result, all of which makes tomorrow a very important day for you and your portfolio. Yeah, tomorrow, the 13th of September, sees the release of the CPI data for August, and it's safe to say the markets are going to be watching real closely. Now, you'll have noticed that the figure for July was lower than June's, and this prompted a market rally at the time. Investors are basically looking for signs that inflation may have peaked, which would suggest the Fed's policy of raising rates is working, which in turn suggests that the Fed might ease off raising rates much higher. For once, basically, everyone wants the top to be in. So, a figure of 8.5% or lower tomorrow will likely trigger a market rally, whereas above 8.5 will go down like a fart in a diving bell. It's something you should watch closely anyway, but especially tomorrow, because as you'll be sick of hearing by now, Ethereum's merge will be imminent by that point, or perhaps even underway. A lower CPI coupled with a successful merge could well signal party time, whereas the opposite, well.
Yo!
Now, I know I talk about inflation and interest rates all the time these days, but that's because they're just so damn important when it comes to which way the crypto market goes. If you want my 2 cents on the matter, the CPI figure tomorrow will have to be significantly lower than July's for the Fed to even contemplate easing off a rate rise at its meeting later this month. Rates are going to continue rising for some time yet, and the only question is by how much at a time. Now remember, the Fed's target inflation rate is 2%, and boy, are we a long way off that. So don't take off those waterproofs just yet. Yeah. Thank you.